trying to scam anyone obviously is a terrible thing to do, but to specifically target senior citizens, many of these people nearing the end of their lives, many of these people have a bunch of medical issues, many of these people don't have a lot of money, some of them just trying to get by on Social Security. So to specifically target these people for a scam is a special kind of low. Far worse, in my opinion, than scammers targeting people who are not senior citizens, but that's just my opinion. You can disagree with that if you want. But specifically what we're going to be talking about today is a company called American Advisor Group, a celebrity known as Tom Selleck, and the terrible product that, in my opinion, at best is a horrible, horrible product you should not be getting involved in, and at worst an outright scam, known as a reverse home mortgage. Now, these products are specifically designed to target senior citizens, and we're going to go over why I think they are a horrible idea. And there's actually been quite a few people have pointed out that this is a product most senior citizens, and I'm sure a couple people it could potentially work out for them, but most senior citizens should not be getting involved in a reverse home mortgage. Now, before we get into the actual company, let's talk briefly about Tom Selleck. If you're under the age of 30, it's possible you don't know who this guy is. He's a famous celebrity. He's been famous pretty much since the 1980s. 1980, the TV show Magnum P.I. launched him into stardom. A show that was on for like 8 years, made him super famous. And fun fact, Tom Selleck was actually going to be the original Indiana Jones. George Lucas and Spielberg wanted him to be Indiana Jones, but he couldn't get out of his Magnum P.I. contract, so that eventually went to Harrison Ford. He was also on the Friends show for a hot minute, and over the past decade, he's been the star of a TV show called Blue Bloods, right? And that show is very popular with seniors. Now, you're probably saying, Scott, why are you telling me the entire celebrity history of Tom Selleck? I really don't care. We're getting to that. It's part of the whole bigger picture. The point I'm trying to point out is that this guy's had an illustrious career, and obviously he has a lot of money, unless he spent the money on really stupid things, but he's made a ton of money over the decades and decades he's been. He does not need to be doing these ads, so it's really quite odd as to why he's doing these reverse home mortgage ads. They're clearly paying him a ton of money to do this. Now, again, I want to point out, the older you are as a person, the more this guy is probably familiar to you, and he's actually a very well-liked, a very beloved celebrity among senior citizens. My mom actually has a huge crush on him, so she's not going to like this video at all. But he's very popular among senior citizens, which is why this company, American Advisor Group, decided to make him their celebrity endorser of their product, reverse home mortgages. He's been doing ads for their company for, I believe, about 8 years at this point, almost a decade, promoting reverse home mortgages. And the thing is that over the past couple of years, people have started to catch on that reverse home mortgages are a little sketchy. At best, they're a little sketchy. And they've started to call them out, right? There was actually the H3 podcast actually did a whole segment on the reverse home mortgages and Tom Selleck a couple years ago. There have been comedians that have been making jokes about this whole reverse home mortgages. And there was actually a Family Guy episode where the entire subplot was Tom Selleck scamming Peter Griffin into a reverse home mortgage and him trying to get out of the deal. They did an entire episode where that was the subplot. So needless to say, there's been a lot of people that have been calling out reverse home mortgages over the past couple years. And it started to get to the company. The American Advisor Group, they run ads, and I want to show you some of them. And they've started to put in their own ads, guys, you got to trust us. We're not a scam. We're just here to help you out.
This isn't my first rodeo. And let me tell you something. I wouldn't be here if I thought reverse mortgages took advantage of any American senior. Or worse, that it was some way to take your home. A reverse mortgage loan isn't some kind of trick to take your home. It's a loan, like any other.
It's never a good sign when the company has to put in their own ad at the beginning of their ad, guys, we're not a scam. Trust us. All the stuff you've been hearing about us trying to rip senior citizens off and trying to take their home away from them, no, 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 that is not true. We're a legitimate product. Trust us. I really don't know why Tom Selleck would continue to be the sponsor for them, other than the fact that they're probably paying him an obscene amount of money to do this, right? And this isn't the only ad. They have multiple ads where he points out time and time again this isn't a trick. We're not trying to take your home. We're legitimate. Trust us.
Just like you, I thought that reverse mortgages had to have some kind of catch, just a way for the banks to get your house, right? It's not any of that. It's not another way for the bank to get your house. And it's also not too good to be true.
Okay, so at this point, it's clear that the company is trying to run damage control. Their image, the image of reverse home mortgages, has been tarnished over the past couple of years. So they're trying to run damage control. Guys, we're not a scam. They do this in all their ads. Now, it actually gets worse because they have an official YouTube channel. I have it pulled up over here. And they have uploaded all of their Tom Selleck ads to their YouTube channel. And I actually have the plug-on that restores dislikes to the YouTube page. And you can see on all of their YouTube videos with Tom Selleck and reverse home mortgages, all of them have more downvotes than upvotes on their page. People do not like them. And they've actually turned off all of the comments for all of these ads because obviously it would be filled with people complaining that reverse home mortgages are scams, and they don't want that, right? And it's never a good sign when a YouTube channel has to turn off the comments for their own video. That's you know, that should be a sign right there, that alone, that, guys, something a little fishy is going on here. Now, at this point, you're thinking, Scott, all right, these reverse home mortgages, they sound pretty sketchy, but I need to know some more information. That's good. You should definitely ask for more information. Now, before we talk about reverse home mortgages, let's briefly go over what a traditional normal mortgage actually is. It's going to vary based on, you know, country, region, all that stuff, but generally you're going to have a 30-year mortgage that you buy on a house. Let's say you want to buy a home. It's $500,000. You'll have to put some money down, but then you'll get a loan or a mortgage from the bank for the rest of the purchase price of the actual home. Let's say you get a $400,000 mortgage, and there will be an interest rate on that mortgage, and you'll be paying that off over 30 years, right? And that interest rate, a few years ago, was quite low, 2 to 3%. I think over the past couple of years, it's gone up. I think it's like 6-7% right now. But whatever it is, that interest rate, you're paying off the loan over 30 years, that's going to add up. It's going to add up to 50, 100, depending on the size of the loan you take. It's going to add up to a lot of money on top of the actual loan that you have to pay back to the bank, right? So that is how banks traditionally get their money from a traditional mortgage. Mortgages have been around for a long time. That's a traditional mortgage. Some people can be like, oh, I don't like mortgages. That's fine, but that's a traditional mortgage. A reverse mortgage, what these companies are offering, is quite a bit different. So a reverse home mortgage, I'll actually pull this up on the screen from Investopedia. You have to be 62 years or older to get a reverse mortgage. So again, this specifically targets only senior citizens. If you're under 62, you can't get a reverse home mortgage. So I actually found this website that explains the pitfalls of a reverse home mortgage better than I did. So we're going to go over this page and I'll give my opinions on it as well. So 10 potential pitfalls and complexities of reverse mortgages. Interest and fees accumulation. The interest on reverse mortgages is typically higher than a standard mortgage and accumulates over time, increasing the total loan balance as no monthly payments are made. So like I said, you don't actually, like they said, you don't actually make payments while you get your reverse home mortgage, but the interest builds up on the money that the bank actually, or this company actually gave you. So over time, your house is basically becoming a depreciating asset to you, and the company actually owns more of your home over time, and you owe less and less of it. So that's a very bad thing. Next up, we have complex loan terms. Reverse mortgages have complex terms and conditions that can be difficult for some borrowers to understand fully. There can be unexpected clauses related to loan repayment conditions or restrictions on what the property can be used for. And they use this complexity to trick a lot of elderly people into signing up for these reverse home mortgages. And then many of these people, which I'll show you later, there's actually a comment on this own page, many of these people feel like they were tricked getting into these programs. Next up, we have effect on government benefits. Receiving funds from a reverse mortgage may impact eligibility for certain government benefits, such as Medicaid or supplement security income. Borrowers need to carefully consider how a reverse mortgage may affect their current or future benefits. So if you're getting more money, this is basically payments to you for your home, basically you could get less money from Medicaid from the government because now you're technically making more money, even though it's not a job or anything, but you're making money. So that can affect how much money you'll actually get from the government if you're a senior citizen living off of benefits. Loan repayment pressure. When the borrower dies, moves out, or sells the home, the loan becomes due. Heirs are then faced with the decision to either sell the home to repay the loan or refinance it into a traditional mortgage if they wish to keep the home. So this is the big seller, this is the big issue right here that a lot of people have a problem with, is that many people want to leave their homes to their kids. That's their inheritance that they're going to leave them. And if you get a reverse home mortgage and you have it for years, the interest is going to build up on it to the point where eventually you may have virtually no equity in your home. At that point, if the house gets sold after you die, your kids aren't going to get anything. There's going to be like no inheritance left at all to them if the interest builds up on this reverse home mortgage. And like I said before, with all these complex terms, many senior citizens don't realize that when they're first signing up for these programs. Decreased home equity. As borrowers receive payments, the equity in their home decreases, which means there will be less to leave to heirs. That's what I just said. While a non-recourse clause prevents debt from exceeding the home's value, the home's equity may be completely depleted, leaving nothing for their heirs. So Ohio State University, I think it was, I'll pull up an image. They did a report on this, and they found that, over the time it can take as little as 5 or 6 years. The actual interest that accrues on these reverse home mortgages can actually be a total more than the actual value of the house. Now, there are regulations in place, so it can never go more than the value of the house that you would have to pay for a reverse home mortgage, but it can equal the total amount, meaning you virtually have no equity in the home at all. At that point, the company completely owns your home. Moving or selling restrictions. If the borrower decides to move or sell the home, the reverse mortgage must be repaid at that time. This could limit the borrower's flexibility in changing living arrangements. Impact on heirs. Heirs may not be adequately informed about the reverse mortgage and can be caught off guard by the financial implications after the borrower's death. They need to be prepared to address the loan repayment to avoid foreclosures. As I talked about earlier, that's going to be the number one issue that people have. Most people, especially people who have older senior citizen parents that sign one of these, they don't know that their inheritance is basically getting flushed down the toilet at that point. Insurance and maintenance requirements. Borrowers must maintain their homes and pay homeowners insurance and property taxes. Failure to do so can result in the loan being called due, which might lead to foreclosure. This is another big issue where all of this is written in the fine print, but most people don't see it, is that you need to continue to maintain your property, even if many of these seniors, like I said, some of them are bedridden, some of them need constant medical care, but they also need to maintain their property. And if they don't do that, if the home they live in becomes run down, the company can actually foreclose on them. They can kick them out of their property and take the property from them. And that does happen. A lot of people get completely screwed over because they're not able to properly maintain their home, and the company's like, well, I guess it's our property now then, get out of here. Rising debt, falling equity. If the housing market experiences a downturn, the home may not appreciate as expected, potentially leading to a situation where the loan balance surpasses the home's value. Financial scams and unscrupulous lenders. Some lenders or third parties may take advantage of the complexity of reverse mortgages to deceive older adults. It is vital to work with a reputable lender which is HUD approved. Now, this website I'm looking at right here, believe it or not, this website is designed to get people to sign up for reverse home mortgages. On their own website, they have to show you all of the disadvantages of a reverse home mortgage. On a company's website where they're trying to get you to sign up for a reverse mortgage, they're like, oh yeah, by the way, there's like a long list of things you should be really, really careful with. Now, if you actually scroll down on this page, the very first comment that someone left is someone who got screwed over by one of these. So Kay left a comment October 31st, 2023. My mom got an HECM, which is a reverse home mortgage, in 2012. She used $60,000, total of $60,000 out of $130,000. She was told she had equity to use. The fees and interest were taken from her line of equity. We knew that fees and interest would accrue. We thought that would be tabulated at the end of the loan as part of the payoff. We did not know they would pay themselves those fees and interest out of her credit line. We were never told that the fees and interest would sap her equity line. Her $130,000 that we were told would grow was untrue. Her equity line dried up in 2 years because of fees and interest. This is a scam. I can't afford the now $280,000 and growing payoff. I have to sell or lose it to foreclosure. This whole thing is a lie. So Kay was the child of an individual, of a senior citizen who took one of these loans, and now they feel completely screwed. This was their inheritance that their parents were going to leave to them, but the interest payments over time massively accrued, and now there's basically no equity in her home that's going to be left to Kay once her parent, if they passed away, or once they're going to pass away shortly. There's going to be no there's going to be no equity in the home for Kay to have, and the actual company gets everything at that point. Now, this is a very good deal for these companies, AAG and the other companies that do reverse home mortgages, because effectively what they are doing is they are paying half off for homes, right? And homes generally, they go up in value outside of recessions like 2008, but generally a home is going to go up in value, and they never give you the full amount of your home, right? So if you could spend half the value of a home, if you wanted a $500,000 home and you only had to pay $250,000 for it, that is an amazing deal. Now, you and me can't do that. We can't do that, but these companies that are offering reverse home mortgages to senior citizens, that's exactly what they're doing. Now, maybe in certain situations, a reverse home mortgage could work for some people. Specifically, if you were a senior who you don't have any children, you don't have any relatives you want to leave your property to after you pass away, and maybe you're in really bad health, you need a bunch of money to pay for your medical bills, maybe in that scenario, a reverse home mortgage could work for that specific person. But for the majority of seniors, the majority of people who are getting these, they do want to pass their house on as their inheritance to other people, and they don't realize that getting these reverse home mortgages, the interest rate is eating away at your value in the actual home, and eventually, over years, you're not the owner of the home anymore. When you pass away, or if you want to move, or if you want to sell it, the actual company, in this case AAG or one of these other reverse home mortgage companies, they own the majority stake in the home, or in many cases, they own the full value of the home after all of the interest has added up over time. Now, while they may technically not be an outright scam, these actually are regulated by the government. In my opinion, and in many other people's opinions, this is a terrible, terrible investment that senior citizens should avoid, right? Seniors don't realize this is screwing them over. Now, I'm going to leave you at the end of this clip of Dave Ramsey talking about why he hates reverse home mortgages, and I'll actually have a link below to the Family Guy skit that they did on the reverse home mortgage scam as well. So take a look at that.
Listen, here's the terms of reverse mortgage, in case you didn't know. Borrowers can receive 50% to 66% of the value of their equity, depending on their age and interest rate, and the interest rate generally set about 5%. Now, why do I tell you not to get reverse mortgages? Because you're going to lose your home potentially, because you get into all kinds of problems, and because the interest rates and the fees are a really bad ripoff. Interest rates are generally set about 5%. Do you know what the going rate on a 15-year fixed is today? 3 1/8. So you're paying almost double, you old people that are getting ripped off. Thank you, Tom Selleck and Henry Winkler. We appreciate your endorsement. You get the opportunity to pay double and potentially lose your house when you're 92. This is a dadgum mess, people.